There's some strategy there. You're loading.
Well, I could go this way with those,
Yeah.
or I could go that way. Right?
Yeah.
So I've got some optionality depending on what you do. Right. If you're here, you're pretty much going one way.
Yeah.
Right?
Okay.
So it depends where you are, and depends what you might want to do. And I don't yet know what you're going to do, so I might create some optionality.
It's the ultimate strategy. Neither do I know what I'm going to do.
Right. Exactly.
Now, you have a very unique past for asset management. You're in the military, and you fought in the first Gulf War.
Right.
I imagine that experience impacted how you deal with regular crises. One, I imagine crises to regular people aren't generally real crises to you, having seen, the worst of it.
I served with the infantry in the Marine Corps, but my role within the infantry units I was serving was as intelligence officer, and I had a scout sniper platoon, and so I was responsible for the forward intelligence in front of whatever unit I was in. One of my jobs was to understand enemy tactics, okay, like this, right, to understand...
I'm definitely going to lose this game now that you're explaining this, but keep going.
But you have to understand enemy tactics. You learn to look for them on the battlefield. You learn from either watching what others are doing and to see what their actions are and what it can tell you, which is actually pretty good training for the market, to be honest with you, as well as the sort of control that you have to get under pressure, right? People are shooting at you, bombs are exploding, how are you going to react? You've got people to lead, right? You can't freeze up. You have to continue to be thoughtful and rational and do the right thing. So being under real life pressure like that, you learn a lot about yourself and you learn a lot about other people.
Today for War Stories, we want to talk about a very tight time frame when things were going horrific in Europe. Also not going so well in China and elsewhere, and that's why it's appropriate that we're playing risk.
As you were coming into 2015 in Europe, Europe was still going through a series of crises. Most of them had been started from tension around the peripheral of Europe, primarily from Greece. The central bank in Europe, Mario Draghi, was doing things to alleviate tension in financial markets. And as you turn the corner into 2015, what he did, finally, is he launched quantitative easing. So people started looking at 2015, the beginning of the year, there's going to be some positive opportunity here. Maybe this is what's going to turn the corner on Europe. But at the same time that Draghi decided to do that, you had a new government that formed in Greece. The Syriza party came in, and the markets were nervous about that, but they were more excited about quantitative easing. And so by the time you got to April, things were feeling a little toppy, and you started to get to where you had to have a debt renegotiation between the new Syriza government and the Germans and the IMF and the European Central Bank. And that's when things started to get tense. And effectively, as you moved to June and July, you ended up in a position where you ended up with deadlock on negotiation between the new Greek government and between their creditor counterparties. That ultimately resulted in a referendum that caused huge volatility.
The government turns around and says we want the voters to decide for whatever reason. And on July 5th, a week later, they hold the referendum.
People were tired of Greece. You had markets that weren't trading, banks that were closed, things were scaring international investors. And if Greece was finally going to be kicked out and leaving Europe, which was what the Syriza party was threatening, they decided to call a referendum to see if they could get the mandate from the population to effectively call the bluff of their creditors and reject their deal. The problem was the people didn't like the deal that the creditors were offering. Nobody likes the deal that the creditor is offering them, right? They didn't like the deal, but at the same time, they didn't want to leave Europe. And this is where the opportunity was.
But Greece is not alone. Over here in China, things are going south as well.
What was interesting about this crisis in China is nobody looked about the fact that markets had completely soared, like up 40% over a 6-month period. There was then move down in June and July where they were down maybe 10, 20%. But then in August, there was an additional move down 20% that got people scared. That's when markets had actually retraced completely the highs they'd achieved all the way back to where they started at the beginning of the year. So even though markets in August had a 20% move in 1 week, they were still not down or down only a tiny bit for the year. So if you put it in the context, if I say it that way, it doesn't sound very scary.
It's not as bad.
People were terrified, okay? People were terrified because they thought maybe the Chinese system was unraveling, right? It was also a time of limited liquidity, and it exacerbated it. When these crises happen over a summer period, it exacerbates the volatility with that less liquidity. And so things fell very strongly in China, and they started to ripple around the world. Europe, US, everything started falling. So 2 things I did. One is I didn't think that this was a real crisis, though I understood that people hadn't sold what they needed to sell. I didn't want to buy because people hadn't sold what they really wanted to sell. I wasn't going to sell everything in an illiquid market because I felt like ultimately this would probably work out. So we shortened up the duration of the events in our portfolio That's the one thing we did do. Sold some of the longer duration ones, kept the general level of risk on in the book, effectively hoped we were right. And we still couldn't really afford to buy a lot of short-term volatility because it was too expensive, but that's what we did.
Well, Reade, thanks very much.
Yeah.
We didn't get to finish our game, but I think
Nope.
I was going to win, so we're good.
You were close.
Good.